Here yesterday, I had my Taylor trading zone drawn out, support at 43.75 and resistance up at 44.01. And the market opened right about below the midpoint of the calculated trading zone, quickly closed the gap, and then rose up to the limit at the calculated resistance, 44.01, which was not violated, or just for a moment, but then came back down through the previous day's close, and then was limited by the calculated support at 43.75. The prices violated the calculations just at the end of the day, but then came back up to finish right where the calculations forecast they would be. So these calculations were accurate yesterday. Let's see, will they be accurate today? There was significant volatility. Look, there are 4 points between each horizontal line on this chart. 4 points. Keep this in mind, particularly if you are a relatively new trader and you've heard about the 1% rule, where you risk no more than 1% of your capital, of your account, on any one trade. Now, look at the length of these candles. Each horizontal line, as I said, is 4 points. Each of these candles, and these are 3-minute candles, is about 6 points. So within 3 minutes, the market goes 6 points. It's $300. And if you have, if that's 1%, if you have a 1%, $300 being 1% of your trading capital, you have a $30,000 trading account. The rule is don't risk more than $300 for any one particular trade. But typically most traders don't have that much money in their account. So how do you trade in this rule? Well, you can trade a 1 minute chart, and here's a 1 minute chart, and prices whipsaw far less because, of course, it's only a 1 minute period. So let me expand this chart to give you a sense of what we're talking about. Here we have 1 minute between each candle, okay? 1 minute. So 1 point on the S&P E-mini is $50. So if you're going to trade 1 point and lose $50, well, $50, 1% of $50 is a $5,000 trading account, so you can lose your 1% in 1 minute. So trading is pretty difficult if you're looking to obey the 1% rule. Basically, I don't see where it's ever been useful, or it is useful. I teach the 1% rule in my course, but friends, it's much more profitable to trade using the Taylor calculator. And this is what I've found, because using the Taylor calculator, let me go back to a 3-minute chart. Using the Taylor calculator, prices pretty much trade within the forecast numbers. And so this is, there's more risk that you have to entail, but of course the rewards are far greater, and this will probably keep you in the game. If you want to get these numbers, you can get them at my site at timelessdollar.com, or you can calculate them yourselves. The Taylor book is difficult to read and understand. Nevertheless, you can give it a try, or you can join my trading chat room where I provide this information each day on the chart before the market opens. So that's my video for today. Trade safely, use lots of patience. Thanks so much for watching, and I'll see you in my next video.